The way I think of the constructed renminbi is that you've got to look at multiple factors of what's driving the currency here. I mean, very obviously, foremost is the macro data. And as today only further cemented, the momentum is still very much down as far as the data is concerned. And it has got to a point where, and as the PBOC reacted with the MLF cut, it was interesting, it's the first time that they are cutting at the 1 year point more than they are necessarily at the front end point, which might just sort of be an indicator of how they're looking at the more stimulus to come into the economy. But certainly data pointing towards currency kind of taking up the pressure from weaker. But even if you look at flows, whether it's portfolio flows or other investment flows, they've just opened up tour growth. Probably means the current account, the tourism deficit is going to kind of widen as well. But ultimately boils down, though, to the official lean back. They've mostly relied on widening the basis between the fix and the model. I would argue that's a strategy which has got diminishing returns because it kind of skews your risk reward one way. The market kind of weighs the possibility that at some point the fixing will be sort of, the gap will be closed in more by fixing moving higher rather than necessarily the market moving towards the fix, particularly if you think about the fact that the onshore spot has a limit in terms of the band to where it can trade to the fix.
So what do they do moving forward then? Because, you know, this expectation that there's only so much that you can do in terms of transmitting anything with effectiveness via the way of the monetary policy channel. You know, you can take off a couple more bits here, take off a couple more bits there, but what's the step that they need to make in order to right the ship? Because it's a confluence of factors, like you mentioned, in terms of the position that they're in, but nonetheless, they're in the position that they're in.
Look, I mean, I think from my perspective, the solution lies not in necessarily the currency or any of the asset price. It lies in actually having a stimulus for the economy, a package which is able to act as a circuit breaker to confidence. And certainly over the last few months, it's becoming once grappled with the idea as to what exactly can break that confidence, but almost certainly will have to be something which is a combination of multiple things. To our mind, it has almost definitely to include a big fiscal step to come through and has to come to a point where it is genuinely able to address what are the key sort of sentiment downsides in the economy.
You can see at the bottom of the screen the line coming in, no deflation in China now in the future. Does that align with what you believe?
Look, I mean, I think I know there's a lot of headlines at the moment around the whole deflation picture just because the headline CPI has kind of gone negative. I think one's got to focus a little bit more on the core inflation picture, which is not anywhere near as dire as what the headline numbers reflect. There is no doubt that that's ultimately a reflection of the weakness in the economy. That's, I think, what one needs to see this in perspective of. And yeah, I think that only adds up to the case for why there is some need to be able to arrest that downside. Something will have to be done. There is not a natural turnaround in the momentum which is happening.